everybody. C. Ray Brower here today with Patrick Schumacher from Schumacher Insurance Solutions. I almost said services, but it's solutions. And we're going to be coming up next talking about lots of things in insurance. Back. How's it going today, Patrick?
Going great. How are you, C. Ray?
I'm finally getting calmed down a little bit after that long trip to Kansas.
Okay, great.
So things been going good. I got unpacked and got laundry still in that needs to be folded. But other than that, I'm doing really good today.
And how was the weather in Kansas this time of year?
Kansas is very strange. They say in Kansas you don't look at the weather report because it's just going to happen.
Yeah.
It was anywhere from 16 degrees low to 60. What was the high day? I think 68 or 69 was the high temperature. So we had a couple of days that was extremely cold. Like I said, a low of 16, 18. Highs at those days barely got over freezing. Some rain. Didn't see any snow in Kansas, but our trip to Kansas was supposed to be, we drove because we needed some tools and stuff for the new build going on. And so we drove. It was supposed to be 24 hours. And when we were about 10 hours in, Google said that we still had 25 hours to go. When we pulled in and stopped, we were 42 hours on the road.
Wow. Yeah, that's a long trek.
It was a long trip with lots and lots of turnarounds and detours, and got to spend, I think it was about 4 hours in a parking lot in, what was that, Surprise, Arizona? I think it was Surprise.
Okay.
Anyway, they had closed the road down. There was that much snow on the road. They shut the road down, had us sitting for about 4 hours before they finally opened it back up.
Wow.
Yeah. So, in preparing for this, I was thinking back about where me and you met. I think it was at a B&I meeting. I don't remember whether I had just visited yours or you visited mine, but it's been a whole bunch of years ago, and it was a whole different company back then.
Sure was. Yeah, I'm thinking it's definitely been over 10 years.
Yeah, definitely more than 10. I've been a realtor for over 8 now, and I did a few things in between, and that was back when I owned the transmission shop. So probably getting closer to 18 years ago. I don't know.
Yeah. Wow. Been a long time.
Yeah. It flies by. So how did you end up making the change? What was the cause for the change from the old company to the new company?
Yeah. So this industry, it's always changing. And I think it's probably one of the things that I like about this industry. And it's also one of the things that drives me crazy and mad sometimes. But when I first started in my agency, I was an exclusive nationwide agent, worked with Nationwide Insurance really as a captive insurance agent, meaning that they were our primary carrier. But they had a great opportunity that they put in place that allowed us to acquire other agencies that were independent agents having access to, other insurance carriers. And that was really the bridge of, I look back and I had some foresight of it, but Nationwide changing from an exclusive carrier to really solely operating in the independent insurance brokerage world. So About 7 or 8 years ago, I did my first acquisition, which really officially made me a broker, meaning I had several carriers that we represented. And then, most recently, I believe it was July of 2020, Nationwide actually took all of their exclusive agents and set them all free, made them all independent agents. So that was a great thing. Benefit to Nationwide customers, and which I'm a big fan of. Anything we can do to reduce costs, was it rather than having two separate companies, one exclusive company and one independent company, it merged them all together, and they closed some unnecessary corporate offices. Now they had one sales manager rather than two, and it created some efficiency in things. And now we're here today. Yeah.
Very, very cool. So you're still with Nationwide, but as an independent brokerage.
So yeah, we are. They are one of the many carriers we represent. We literally have dozens upon dozens of direct appointments with carriers, which for us, that gives us the opportunity to find the right product pricing for our customers. I always like to say we don't work for the insurance company. So I think we'll get a chance to talk a little bit about the insurance industry, and you can be confident that I am unbiased. I don't want these insurance companies making any more money, again, as a consumer, but I do know the back end aspect of it. And so as a business owner, I can speak to the relevance of, well, they still need to make a profit. They're not a nonprofit, and nobody can be a deficit company, because then you go out of business. So I can shed some light into what's happened in specifically to California, because we're in a very unique time, and also speak to, I believe, what it's going to also take for things to level off, and what consumers can expect here in the next couple of years.
Well, very good. So what would that be specifically? What kind of things can we expect to be coming out of the insurance industry based upon how many claims have been filed due to PG&E and the weather and all that stuff that's going on here, as well as our political policies?
Yeah. So let me start with where we've come from. I think that's kind of going back, and I won't go back too ancient.
But you're still a kid.
Yeah, but I mean, even if we go back to, and some people probably will have a different idea of when the starting point of things really getting bad, but I think it was the coffee fire over in Santa Rosa area in probably 2017 or 2018, and some of my numbers might not be spot on, but we remember that fire, and we remember that was really new in the sense that it took out residential neighborhood.
Right.
This wasn't a fire that's up in the foothills or and there's forested areas over there, but that was a very, very expensive claim. And since then, we've seen the Paradise fire. We've seen multiple fires up in Redding area. We've seen tons and tons of fires, Southern California, Tahoe. So fires are a big, big problem. And to give you an example, the California Fair Plan is basically what provides fire insurance for high risk areas where no other insurance carrier wants to be in the game.
Right.
Last resort type option. The Fair Plan is not a state-run agency. It's a conglomerate of all the other insurance companies that write business in California. So over the last 20 years, they basically were able to accumulate a net profit of $10 billion over those 20 years. Well, it took about 5 years to get them to the point where that 10 billion in profit, they were now 10 billion in the hole. So just that short span, we took out all the profits, and then they're 10 billion in the hole. So you have carriers asking, well, why do we want to play in this game? Why don't we go out where there's less risk, more profitability? And I think that's a very valid question. And we've seen carriers do that. They just say, I'm not interested in, writing in California anymore. And some of them have left. So then we have claims that come through. Most recently, the windstorms. That was in my 16 years of doing insurance, the busiest 30 to 45 days of claims I've ever seen.
Really?
And again, a lot of those claims, $2,500, $5,000, $50,000. They're not, the $500,000 claims or $1.5 million claims, but the quantity of them was just something I've never experienced. So that's kind of where we've been in terms of claims. 5 to 7 solid years of lack of profitability in California. So as a consumer, we can say, well, that's the insurance companies. They got to figure that out. They're a business. Let them figure it out. Well, yes. But the Department of Insurance, which oversees the insurance department, they have oversight in terms of increasing rates. So if an insurance company said, you know what, we need to increase our rates 15% just to break even, well, they've got to go through this process, and that process can take 6 months to a year before rate filing is actually approved. Well, COVID hit, and then you have an insurance commissioner who is an elected official, and it was a voting year, this most recent November of 2022. So this is my political opinion. It's the only part you'll hopefully hear me get political about. He got to promote that he prevented insurance companies from increasing their rates. Well, in my opinion, that was not a good thing for consumers, and he promoted it as it was. And so insurance companies did not have the ability to increase their rates, and so they've been taking losses. Well, he got elected again, and now is approving all the rate increases, but you've got a backlog. And so now, rather than people experiencing maybe 5 to 7% rate increases year after year, now you're going to see carriers that are going to be increasing rates potentially 15 to 20%, which is a big hike for a lot of people, especially if you're on a fixed income.
Right.
So that's what's coming down the pipeline, rate increases. My advice to folks is, well, before I go on to that, not only is our rates going to go up, but insurance carriers are also making it harder. They don't actually want to write business right now. They prefer to lose business. I've talked to carriers. Their goal is to lose 5% of their book this year. That would be a great year for them if they lost business. So some of the things that they're trying to do, and I know I'm rambling here, but hopefully this is helpful. They're wanting properties to be in better condition. So the house that's a little bit worn down, that's going to be a little bit tougher to find insurance, because an insurance company is not going to want to take on that type of exposure. Proximity to wildfire areas are going to continue to be harder to write. And so my advice to consumers is, you can talk to your agent and broker and discuss what options you have. If your house is, not in, if there's not a sign of pride of ownership, it's going to be a little bit harder to move carriers. And the last thing you want to do is move and then find out that company, after doing an inspection, decides that they're not going to stay on the risk. You can find yourself without insurance, and that's not a good place to be for customers. You can also look at doing some deductible changes to help lower the rate. So talk to your professional, and hopefully they'll be able to give you some options, which is really ultimately what you want, to be able to make a good decision.
Right. So to step back a couple of things.
Yeah.
The California Fair Plan is not a state agency.
Correct. So I always like to So as far as the profit and losses are distributed out to insurance companies based off of their percentage of market share. So if you've got a large company that has, 15% market share of California, they're on the hook for 15% of the losses. So that company is those rates or those losses that they are paying out for Fair Plan, those are still going to get tied into their standard regular homeowners insurance policy. So you've got people saying, well, why is this impacting me? Right? I live in a residential area. There's no fires. There's no floods. It's mild. Haven't had a claim for 25 years. And I just say, I get it. 100%. Insurance is everybody's playing the same pool. We're all putting our money into that pool, and we hope we never have to use it. And if we do, we don't know, is it going to be a $5,000 claim? I had a claim that paid out beginning of last year, paid out $1.5 million. So when you have a $1.5 million claim, you will never give the insurance company back enough money to be a profitable customer in your lifetime,
Right.
So again, that's what we kind of have to remember with insurance is you're really not, the goal is not to break even, right? Pay the insurance company as much as they pay out in claims. Right. To me, my goal is to pay my premiums, and really I'm buying peace of mind. And I know that sounds like maybe it's just how my mind's wired, but I never want to use any of my insurance, my homeowner's insurance, my life insurance, my health insurance. But we got it there just
one of those you definitely will use.
One of those, yeah.
One of those three is guaranteed you will use.
Yeah.
But yeah, I get it. I always thought the California Fair Plan was a state-run thing. And I've never understood it completely because I sell a couple of homes and I've sold several up in the hills, and I've seen anywhere from $150 or $200 a month extra for the California Fair Plan to $1,000 a month for the California Fair Plan. And in my mind, both properties had equal risk.
Mm-hmm.
At equal risk. The $1,000 a month is up in Murphy's area, and I want to say it was $150, $200 a month. It was not much. Was in right up above Glencoe. Can't say the name of the little town up there right now, but both of them in the forest.
Yeah.
Both of them in the forest, and yet that far apart as far as what they were having to pay for insurance.
And I always, there's so many factors that go in, and actuarials and people who, geek out on these numbers. Most of them a lot smarter than I am. So there are so many different factors that it is really difficult to pinpoint. But I'll just tell you some big ones that they're looking at is there fire hydrant in the area? I can tell you Arnold has a lot of fire hydrants in their residential areas. So pricing isn't going to be as bad as, some of the things that I've quoted in Placerville or Shingle Springs. How far they are from a fire department, and if it's fully staffed, if it's volunteer, if it's CAL FIRE. So those are going to be just a few, but it is really difficult to kind of pinpoint exactly which factors are driving it up.
Yeah. But yeah, your description of all the companies actually paying into that California Fair Plan pool, that makes more sense to me now than what I was thinking previously, right?
Yeah, and it speaks to, the rate increases. I think that the last 2 years they've had 25% rate increases, that's a really, really high rate increase, especially if you're already at, let's just say round numbers, you're at $4,000 and you go to $5,000, that's a big increase.
Yeah, it really is. And many people can't afford that kind of an increase. immediately. Right?
Yeah, and you bring up, I believe you've got a lot of real estate agents that probably watch this, and I feel like it's difficult as you're working with with a customer, and maybe any mortgage lenders who are also working with this. Some advice, if trying to do what's best for the consumer, is for any of these folks who are really right on the cusp of their budget, and we've already pushed their budget up a little bit to get them into the home they really want. I think being pretty transparent with, like, hey, what would it look like to you if you did see your insurance rates go up 25%? Is that going to put you in a tough position financially? And for some of the folks that it will, I think we have to reconsider if we should be pushing them to a particular property, or just make them aware of it, which could even just be, hey, to talk about what could potentially happen in the next 2 years with your insurance guy that you're getting a quote from.
Right.
We can, especially right now, I think we know what direction rates are going, and they're up. If you talk to an agent who says, yeah, I think your rates are going to come down, I'd turn around and run away and go find another agent, because they got their head in the sand. But yeah, anything we can do to try to educate folks, we're trying to do. You'd mentioned nationwide, and I saw a news article that came through my email, and it was mentioning something about how this was one of the most profitable years that the carrier's seen in several years. And I'm just kind of chuckling because, or no, I'm sorry, it was the highest revenues, not profits. Profits are good. Revenues are irrelevant if we're not talking about costs, right? Because if you're, but
if you made $100, but it cost you 120, that wasn't very profitable, and the revenue didn't count. That was.
And your numbers are very actually close. With a lot of these carriers, they're making 100 and they're spending between 112 to 115. So if anybody wants to give me $115, if I give them 100, I'll sign me up. But but that's just not sustainable. And when we hear things on the news, we have to ask ourselves, are they discussing something nationally, or are they discussing something specific to California? Because I can't tell you how many news anchors I've seen talk about and they just paint the insurance companies as the bad guys. And again, said earlier, I don't work for them. I have no reason to defend them or to justify, but I see it from both ends. And I just realize, insurance it's a numbers game, right? We want a very little percentage of profit off of a lot of different policies. So if the insurance company could only pay out $98 for every 100 they receive, they would be very, very happy. They'd be jumping up and down. So yeah, 1 or 2% profit margin would be a pretty amazing thing right now in the insurance industry.
Yeah, and stepping back a little bit, talking about the government starting to talk about the insurance companies, the news anchors talking about the insurance companies. We can also look at the same thing with the oil and gas industry. We're trying right now to regulate the California companies because they extorted so much money from us consumers during this last crisis. But here in California, if you run the numbers, like you say, run the numbers, pay attention. The state of California made a whole bunch of money because they're taking a percentage of that money, and it's much higher here than anywhere else. In Kansas and Oklahoma, running around this last 22 days, and saw 298 to 349, I think was the highest. Might have been 359, but compared to what we've got here, right? And when you look at it, that difference isn't oil companies. it's the California government charging us
Right.
extra money and
Yeah.
forcing us to make a different gas.
And I remember last year, I remember like, wow, gas is finally below $5, and I felt good about that. Like it didn't take long for the reprogramming being like, oh wow, that's a 4. That's
Yeah,
we're off to
yeah,
a good off to a good start.
exactly,
Yeah.
exactly. And then I grew up during the original oil embargo, so when I started driving, gas was under 50 cents a gallon, under 40 cents a gallon, under 30 cents a gallon sometimes, and it went clear to 75 cents a gallon.
Yeah.
And they had even and odd days. You could only buy, if your license plate number was an even number, you could only buy gas on an even day.
That was before my time. I have heard of those days, but yeah, I think the youngest or the lowest I recall seeing gas as a kid was like 79 for regular, and I think it was 99 cents a gallon for,
Yeah.
Supreme. But
Yeah, for sure.
yeah,
Well, Patrick, I really appreciate you coming on today. I'm looking
my
forward
pleasure.
to coming on regularly if you would like.
Sure. Yeah, this is an industry I'm super passionate about. It's really just become a joy to educate people about insurance, and we just touched on the personal lines aspect of kind of auto and home insurance really this time, but yeah, I'd love to talk about any other types of insurance that you think your listeners would be interested in.
That'd be perfect. I really appreciate your time. Anybody that is out there looking for insurance, Patrick Schumacher, Schumacher Industry Solutions. I keep almost saying services, but solutions. He does insure Lodi, as it says in his email address. Everything's been scrolling below. Again, Patrick, thank you so much for coming on today. Really
Thank you,
appreciate it.
C-Ray. Yeah, thanks for having me.
Everybody, go out and be the sunshine in somebody's rainy day. And I know you had a bunch of them while I was gone. So, and remember to see Ray to find your perfect home. And we'll talk to you all guys all real soon. Thanks again.